Good morning, Paul Georgia from Allendale. It's March 17th, Monday morning, St. Patrick's Day, and everybody might be dressed in green today, but the markets certainly are in the red. We got corn, soybeans, wheat, all anywhere from 7 to 10 cents lower as we speak. News over the weekend, the Russian-Ukraine situation continues to intensify as Crimea voted to go back to Russia. So that tension is continuing to be stretched and doesn't seem to have much impact on the markets here this morning. However, we're seeing the stock markets around the world show some strength, grain markets and other commodity markets showing some weakness. So some of that risk is being taken off the table, and seeing pressure in commodities in general. Other news, we have talked that there's several cargoes of Brazilian soybeans going to be moved into the eastern part of the U.S. In our eastern ports. We're also getting comments out of China that major agricultural bank there is suggesting to the government that they reduce their holdings of the government reserve stocks, which is at a record level right now. So that is more feed for the bears here this morning as we start this week. The corn planting is getting underway in the south. Louisiana is getting some planting done. We'll have more updates today from USDA and various states. The USDA will not give us a full planting progress as of yet for the entire U.S., but we also got word over the weekend that corn is being planted in Arkansas. One of our AgriGold representatives shared that information with us here over the weekend. We've got NOPA crush numbers coming out at 11 o'clock this morning. Their trade's looking for about 141 million bushel of beans crushed during February. So that number will be watched closely. Also, we had the CFTC report on Friday showing that managed money increased their long positions in corn by 51,000 contracts. That puts them net long over 200,000 contracts of corn right now. Soybeans, they reduced their holdings there by about 15,000 contracts, and in wheat increased their long position or added long positions of about 16,000 contracts, which makes them now net long in the wheat contract as well. Outside markets this week is going to be looking at the FOMC meeting minutes that will be released on Wednesday. This will be the first time Chairman Yellen will be fully in charge. It's going to be monitored very closely there. In the livestock trade, pork cutout values were sharply higher on Friday, up $3.28. We got word that Smithfield had shut down one of their North Carolina plants because of lack of supply of hogs on Friday, just for the day, however. So it's a very serious situation of how tight these hog supplies are currently because of the PED virus. And as we get into and move forward here over the next couple weeks, we will see and be monitoring very closely this slaughter level as the trade gets a handle on how tight of a supply pork really is here in the U.S. In the beef side of things, cash markets traded higher last week for fed cattle in that 149 to 50 range, 151 in Nebraska. The cutout values, however, were weaker on Friday, down 86 cents in choice, select down 37 cents. Cattle traders are looking forward to the cattle on feed report that'll be out on Friday, and they'll be looking at that to see the number of cattle that we've got left in feedlots. So a lot of things going on here in the markets right now, a lot of reasons to stay in touch with Allendale's research, and we'll be happy to answer any questions that you might have. You can reach us at 800-262-7538. We wish everybody a very successful trading day. We'll talk to you tomorrow morning. Thank you.